All right, welcome back to the Weekly Rebalance. We're going to be going through the Santa Claus Rally this week with myself and Nick. So, welcome back, Nick. Hope you're doing well, and Merry Christmas.
Thanks. Merry Christmas to you as well.
Yeah, absolutely. Exciting. It's December 23rd, and it was topical for us this week, I felt, to cover markets, obviously, and we're getting close to the end of the year, but talk a little bit about seasonality and the Santa Claus rally. And I'm just looking here on my screen here. I got the TV up here. I'm watching the news, and it looks like now the S&P 500 closed at a new record high today. Did you see that as
Yep.
well?
I did see that the record valuations as well within the S&P 500.
Yeah, so very, very interesting. So I guess before we get into the Santa Claus rally, which I think is an interesting topic and a timely one with Christmas coming up in 2 days, are we having a Santa Claus rally? What's the market look like the last couple of weeks?
It's a great question. I mean, so far we've seen some decent performance here. Last week was positive for the S&P 500, particularly for consumer discretionary stocks, up about 1% last week. So I thought that was interesting, kind of topical, tying to Santa Claus rally and just increased consumption leading up to Christmas. Not too much of a surprise. Um, I thought it was interesting to see. One of the best performing stocks last week was Carnival Cruise Line. So in that consumer discretionary space, there maybe not necessarily too tied to Christmas. Just found that one intriguing.
Yeah. I don't know, maybe do you ever take a cruise on Christmas or know anybody that takes a cruise on Christmas?
I don't, but I know some people do it.
Yeah.
I know some people
Not an
do it.
uncommon thing, I guess.
Yeah, that one was just that one was funny. I followed Carnival a decent amount because we do covered calls and some of our own accounts uh, to create some income. And one of the positions that I do that on a decent amount is Carnival. So on top of the
Yeah.
tie into consumer discretionary, just follow that one pretty closely.
Yeah, absolutely. Well, exciting times. Yeah, the S&P is at an all-time high now. Uh, you know, Interesting. The other market research or market update for the week was interesting with gold and silver. We covered gold and we covered silver both recently, but really now gold, I think gold price is at an all-time high today,
Yep,
actually,
yep.
and silver pretty much
Silver
there
is
as well.
yeah.
Yeah, really locking, continuing to stabilize even after their huge run-ups this year. And not that uncommon or not that unexpected, at least from my perspective, especially as we go into a cutting cycle where the Fed starts to cut. I would be surprised if, especially gold, but both gold and silver, I'd be surprised if either of them really had a major correction while the Fed is in a cutting cycle. Now, maybe after if they pause, if they get to a more stable rate environment, and maybe even we're now expecting rates to go up, you could see that change course. But it kind of makes sense as the Fed cuts that gold continues to rise along with silver.
Really does, and I just geopolitically as well. You've got Venezuela going on right now, causing a decent amount of concern. Just tends to be a good time to buy gold when there's geopolitical concern as well. So a lot of catalysts for precious
Right.
metals.
I guess the only catalyst for the downside is just the high price, right? Just
Yeah, I think
after
particularly
anytime after you
silver.
have that type of run. Yeah. How do you weigh that if you're looking at portfolios and thinking about an allocation to gold? It's always tough to buy at an all-time high, even when it sometimes you could argue that it makes sense. How do you
Yeah.
weigh the issue of potentially having, you know, a long way to fall just because we're hitting new high prices all the time?
Yeah, it's one of those interesting things to balance. I mean, we're pretty consistently hitting all-time highs in pretty much every market for the most part. Uh, so you're kind of always balancing that out. I feel like that's at least a decent um, frequency that you're balancing something like that. For gold and silver in particular, I think it's definitely something you have to keep in mind right now, just given how quickly they've risen to their current levels this year. Just
Yeah.
ridiculous growth from both of those this year. So it's certainly something to keep in mind. I think you have to be prudent with an allocation to either of them, but there are positive catalysts there. And, if you have that conviction, it's a decent time to, I guess, if you have the conviction, then you may as well move forward with it. You just have to keep that in mind and moderate your decision making a little bit.
Yeah, absolutely. Well, from a macro perspective, the dovish tone in general is supporting risk assets.
Mhm.
And risk assets are seeing all-time highs, like we're looking at the S&P 500 today, hitting another all-time high. I think that for me in particular, something to lean into, something to rebalance into, is looking for those risk assets that maybe are not as pricey as that, maybe they, some other assets, right? So for example, within equities, there are different types of equities. So you can find equities in general are a risk asset. They should be supported by a dovish tone from the Fed. But can you find equities that are not as pricey as some of the Magnificent Seven, right? Can you find some of these less loved names that maybe will be bolstered by a dovish tone and lean into risk assets that way? And I think that's a smart thing to do. Same thing with international. International is another good example. You can find decent valuations in risk assets that are somewhat, not just the item that's gone up in crazy in value for the last 15 years, right? So there are ways to tactically lean into risk assets without just, buying everything that's at, its very top.
Yeah.
Because that is certainly a risk when you're looking at the Magnificent Seven, any of those names, they're very pricey. Like you mentioned earlier, the multiples are also at an all-time high, so you're paying a premium for those things. Gold, silver, good example. Just something to think about, looking for those assets that can be risk assets and can participate in a dovish environment, but maybe aren't so risky that if we do have some correction of sorts, that we're not, you know, just in these assets that are going to fall really, really aggressively. So
Yeah.
again, just something to think about there.
Definitely important to think about. And yeah, considering that you're at an all-time high as well in certain assets, specifically like silver and gold, it just highlights the importance whenever you're doing any sort of asset allocation change to consider the counter trade. Because if you're buying, somebody else is selling. It's just important to understand the reasoning for both of those and understand that you could be wrong and minimize that
Right.
probability.
That's why you diversify, right? You
Yep.
don't just own one asset, you take diversified bets on many different types of asset classes. And that's a good, reminder is you can be aggressive. For example, let's use equities. Everyone thinks of equities as aggressive, but you can be aggressive and lean into a 100% equity portfolio, but still be diversified and still have different types of equities that are going to behave very differently depending on what's going on in the in the environment.
Definitely.
Well, I feel like that covers the research of the week. So I think we are having a Santa Claus rally.
Yeah.
So let's let's dive in a little bit to the research of the week and discuss more specifically Santa Claus rally. So uh, before doing some research on this, what would you have defined as the Santa Claus rally? Let's define it first. Like what do we mean when we say Santa Claus rally historically?
Yeah, I think that was one of the interesting things. We were discussing topics for this week, and Santa Claus Rally was brought up, which is something I'm loosely familiar with, but I didn't have the exact timing of it correct. I always think
Right.
of it leading up to Christmas, and it's slightly thereafter you see equity markets perform well, which I think generally is a trend that's there. But more specifically, when we're talking about the Santa Claus Rally, we're talking about the last 5 trading days of December through the first 2 trading days of January. That's the Santa Claus Rally period as defined by Hirsch. So
Yep.
I was a little bit off on that timing. I don't, you probably knew exactly when it was, but I was a little bit surprised that it was such a narrow window.
No, I didn't know that it was that narrow of a window as well. I'd never looked into that specifically enough. I just generally knew, yeah, December is typically a decent month for stocks leading up to Christmas. Volume comes, typically down, volatility comes down, and stock markets tend to rise. But I didn't know either that it's really those last 5 days of December and then the first two of January. So it is a pretty tight window. And on average, the S&P 500 has gained 1.3% on average during that period, which is a really, really nice number for just a short number of days like that. So definitely, the Santa Claus rally is real. And we do seem to be like we're having one here. I don't know the exact number I mean, we won't know until, we're into January, but we do seem to be having a nice, push here, and maybe having a little bit of a Santa Claus rally.
Yeah. Well, I guess that would kick off tomorrow, correct? So we would have the 24th, 26th. Yeah. Um,
Yep.
I think it's definitely going to be an interesting one to watch. We've got a lot of positive news coming out from the market. We got GDP print today that was really positive,
Hmm.
4.3%. That blew away, I think, pretty much any estimate that we had seen out there. Uh, Generally, we're in a cutting cycle. Uh, it seems like it would be a reasonable probability that we see a Santa Claus rally this year.
Yeah, reasonably possible. That's for sure. Absolutely. Um, the typical it's an interesting time of year. Doing the research on this, one of the drivers is obviously just optimism. People are happy going into Christmas. They get a bunch of days off. Christmas one week. I mean, it's so funny how few people are actually working this week and next
Yeah.
week. The number of people that are on vacation are just saying, "I'm out till the end of the year." I guess
Yeah.
just that optimism is just permeating through all the market. So that's an obvious one. But the other thing that makes sense is, you can see people starting to tax loss harvest. And so actually selling and then also buying back typically, but it can create some churning. But people are typically done with that by this time of the year. So now we're just like I said earlier, we typically see volumes go down, trading volume goes down, volatility goes down, and that is normally a positive for stock markets, and they just typically tend to rise.
Yeah, it is. I think it's really interesting to read all of those reasons that people give for the Santa Claus rally and it continuing to show up and have a solid return. I think a couple of the ones that were highlighted that I found interesting were there were some people suggesting that people are getting their Christmas bonuses and they're investing them. That one was a little less commonly quoted than some of the others, but I thought that was interesting that someone would highlight that because I guess that makes sense. Um, and then the other one was, like you said, a lot of people are taking the days off. Institutional trading tends to decline. By and large, retail investing is predominantly buying for the most part. So
Right.
just more passive dollars going into the market, which tends to push things up, especially when institutional money isn't in play and doing a lot of selling. So
Agreed. We manage, let's say, 10,000 accounts total. I don't know about you, but I have seen people depositing cash and cash going in today. I mean, we invested just myself. I oversaw quite a bit of cash going into portfolios today, and just people. I don't know where the money was coming from. I don't know if it's coming from Christmas bonuses or something else, but there was a good amount of people just depositing and then investing the
oh,
cash. So, did you
yeah.
see the same?
Yeah, I did see a good amount of buy onlys today, a lot of buy only transactions, deposits coming in, putting the money to work. Did see a decent amount of that. I think it's funny, the 23rd, we're coming up on Christmas. I think a lot of people, this is probably the last day of the year that they work. So the 23rd ends up being a little bit hectic because people are realizing, oh,
Right.
I haven't gotten that done. I need to go get that done. And, you end up getting a ton of emails. But Yeah, definitely a decent amount of buying today.
Yeah, absolutely. Well, with that in mind, what are the actual portfolio implications? So, and let's talk a little bit more broadly about seasonality here and not just specifically the Santa Claus Rally, but do you chase these type of seasonal or something like a Santa Claus Rally? Do you chase those type of things? And, what are the other parts, I guess also, what are the other parts of the year that we typically see that are strong and typically see that are weak?
Yeah, in terms of something like the Santa Claus Rally, I think we would all categorize it as basically a market anomaly. It's something that happens. There's not like a great fundamental reason as to why it happens. But the relationship seems to be there, and it's pretty strong too. I mean, 1.3%, right, in 7
Hmm.
trading days. That's certainly notable. So there's really something there. In terms of trading it, it gets a little bit difficult because you are kind of trading this anomaly, which is something you can do. You can certainly chase those returns, but um, you're verging on like playing the numbers game into gambling a little bit, in my opinion.
Right.
You're kind of getting into that space, especially when you're looking at a short window like 7 days. Um, a lot of people that I talk to, family members around this time of the year, talking about what I do for work. They'll make the joke that it's gambling, and there are parts of the financial market that are gambling, just pretty much that they are gambling. When
Right.
we're starting to try to trade anomalies, I feel like we're kind of getting into that territory. Maybe not quite there yet because there is some reasoning for it. It's I don't know, but we're certainly getting closer to that than playing the long game where it becomes more of a principled approach that I would argue is not gambling. But
Right. It should overall it should be a small input
yeah,
more than anything else. You still want to maintain your long-term discipline. You don't want to use that for um, any major input. But there definitely are, like we mentioned, some trends. So the Santa Claus
yeah,
rally is the one we're talking about specifically here. But the best months, December is one of them. April is
yeah,
one of them, and November. Those typically are the best 3 months. The weakest, September, February, and May. Um, Q4 is typically the strongest. Q2 is typically solid. Q3 and Q1 typically tend to be very volatile. So there's definitely some notable things that you can pick up in seasonality. And again, you may use it as part of a tactical input in your
yeah,
decisions, but probably not something you want to go and, use as a long-term discipline to implement a portfolio. That's at least how I would take. I think
yeah,
you said it well, Nick, that if that's really your strategy, it's not a great strategy. There, you got to have something more than that. Maybe it's an input when you're deciding something, maybe a small part of that, but probably not a long-term discipline strategy betting on seasons.
definitely. And I mean, I think you see that show up with the Santa Claus rally as well. Predominantly, it's very positive. I've got a chart here that I'm looking at back to 1950. The Santa Claus rally period and the return of the S&P 500. And there's a number of periods where it's super high. I think, let's see here, 2008, 7.45% return over that window. So there's
Yeah.
some of these Santa Claus rally periods, we just see enormous growth. But we also see pullbacks in the market as well. Particularly the past 2 years have been bad for the Santa Claus rally, down 0.53% in 2024 and 0.88% in 2023. So it can not pan out for you. Again, it's an anomaly. It's a notable anomaly in the sense that it's pretty significant, 1.3%, and it seems to be relatively consistent, but can't necessarily count on that. And especially when you're looking at a short time horizon like that, it's very easy to maybe get overexcited, get too excited, and rely on that a little bit too much. But there are a number of years where it does extremely well. So um,
Agreed.
maybe if you combine it with a few other things, some analysis of the environment, you might have a strategy there. But just in and of itself, I'm a little bit hesitant to just pile my money in on those 7 days and then sell right out afterwards.
Right. Probably not the best approach, but it's nonetheless something interesting to follow along with and do a little study on.
Yeah.
So, anyways, I think that covers us pretty well there, but we've got some interesting trivia this week, at least I do,
All right.
related to seasonality and the Santa Claus Rally. So should we move on to trivia?
Yeah, let's do it. I only have one
All
this week.
right, so sounds good. Well, I've got two. So let's go. I'll ask one, then you ask one, then I'll ask one, and then we'll wrap up and head off to the holidays.
Sounds good.
Um, all right, so specifically related to the Christmas Santa Claus Rally, we know we've already discussed that the S&P 500 has posted an average positive return during Santa Claus rallies. How many years since 1950 as in a percentage, what percentage of years since 1950 have been positive Santa Claus rallies?
Just looking at that chart. I'm gonna say probably over 80. Let's do 83%.
Ooh, just a little high, but that is a really good guess. You're within reason. You're within
All
like one
right.
standard deviation.
Okay.
It's a 75%. 75%.
Wow. That's
So
still, yeah.
pretty very, very high. Yeah. Not quite 83%, but not far off. You were very close there. 75% of years since 1950 having a Santa Claus rally. Pretty darn good. And to be honest, way higher than I expected. I didn't look at that chart that you were looking at, so I didn't have that knowledge, but just thinking to myself, looking at my career and trying to think back through Santa Claus rallies, I didn't think it was going to be 75%. So that was impressively high from my perspective.
Yeah, that really is impressive. I want to see, I want to take a look at this in different periods as well. I mean, I would imagine for the most part, if we take a specific week, a decent amount of the percentage for that week going back to 1950 is going to be positive. At least I would imagine. The S&P 500 has continued to climb, but there certainly
Hmm.
seems to be something notable about this Santa Claus rally period.
Yep. Something going on. So 75%, really, really high in my opinion.
Yeah, that really is high. All right, let's see here. I came up with a second one, so we can do two here.
All right, sounds good.
All right, I'll say my second one for last. It's the more fun one. This one is so. What year did the New York Stock Exchange first close for Christmas Day?
Huh. Um,
It's in it's in the 1800s.
yeah, well, okay, that's helpful. I was going to guess sometime early in 1900. 1891.
Not bad, not bad. 1871.
Okay,
But before that, it was open on Christmas Day.
interesting. Open on Christmas Day.
I guess it was technically open, but you know, I
I don't
don't
know
know
what
how
they'd
much.
be trading.
Yeah, yeah. I don't know. Probably was not very busy.
Yeah, probably not very busy. That'd be an interesting thing to study at some point. You know, what percentage of the population was able to participate in markets
Yeah,
during, throughout the decades and centuries? Like in the 1800s, yeah, who cares if the stock market's open? How many people even knew what the stock market was or were
yeah,
able
yeah,
to
yeah,
participate in
yeah.
it?
Exactly. Exactly. I thought that was interesting, though.
So
I would
that's
have just assumed that it was always closed on Christmas,
yeah,
but
I
surprising
would
enough,
have too.
yeah.
Yep, absolutely. All right. Good one. Absolutely. Okay, next one. Which sector typically leads during the Santa Claus rally? Which sector?
Ooh.
Now we'll just use the typical, what we would referred to as the typical GIC sector. So what
Yeah.
sector typically is the leader?
I mean, I'm gonna go, true Christmas spirit here. We're going consumer discretionary.
You are 100% correct. Consumer
Like a good
discretionary, which makes
American.
sense. That's right. Consumer discretionary. Well, and let's see. So if there's truth to the Santa Claus rally and it's driven by optimism, that makes sense. Consumer
Yeah.
discretionary should lead the way.
Yeah.
So pretty supportive of the rally there. It does make sense.
Yeah. That does that's funny. Yeah. Some of those people need to get out there and spend those Christmas bonuses and not invest them. Prop up
That's
the
right. Get out there,
consumer discretion. Get out there and
prop
spend
up
like
the
a good
economy.
American.
Oh, that's funny.
All right. This one's more fun. This one's kind of related
All
to
right.
that. All right. Which company is often credited with popularizing the modern image of Santa Claus through advertising campaigns starting in the 1930s?
Coca-Cola.
Yeah. Yep.
Yeah,
Yep.
absolutely. Okay, did I have I asked you questions about Coke and Santa Claus before?
I don't think so.
This is an interesting one. So Santa originally pre-Coke was not red. He was typically green, sometimes red, but typically green. And if you look, the Santa red, the reason for Christmas's main color and Santa being red is because of it's Coke red.
Go crazy. I was doing
Yep,
some
it's
reading on
Coke
that
red.
today because I was curious about it. I knew that Santa Claus's modern day depiction came from Coke. My
Yeah,
parents, they used to like collect all of this Coke stuff and have it around
yeah,
the house. So I knew about that. I did not know much more than that.
yeah.
So it did a little bit of reading on that. I did see, like you said, that most of the time he was depicted wearing dark green, and I don't think he was fat either, for the
No, he
most
was
part.
little. He was a little elf because Santa's typically an elf, not
Yeah.
a giant man, right? But Coke decided to make him a giant man, and now everyone thinks of him as at least in America, thinks of him as a
Giant
giant
happy
man.
man. I think it's
Yeah.
pretty international too, because I was reading about that, and it like internationally he is seen as the jolly red fat man. Uh,
Yeah.
yeah.
Yeah,
So
I mean, it
I
makes
mean, Coke is international.
Coke is sold globally.
Yeah.
Yeah, absolutely. Well, Coke was also they were typically thought of pre the advertising with Santa Claus, typically thought of as a refreshing drink for the summer. And they're speaking of seasonality, their sales always dropped in the winter. And they
Okay.
wanted to boost that image, so they tied their advertising to Christmas and Santa Claus, and that was the way that they actually now completely flip-flop that. Their sales are typically better in the winter around the Christmas months than they are during the summer now.
That really is funny. I didn't know that, but that's a crazy marketing push that they had there that was wildly successful.
Yeah. I mean, one of the best marketing pushes ever. I mean, Coke in general, it's all marketing, right? That's
Yeah,
their whole they produce this syrup that, we
yeah,
all love to drink and is this carbonated goodness, but that it's marketing. Like what's the difference between Coke and Pepsi, right? It's marketing. It's
yeah,
What's the
yeah.
difference between Coke and any brand?
You're taking me back to my sixth grade science experiment, testing whether
What was
people
your
can tell
sixth
the
grade
difference.
Could they?
Some people could. They didn't always
Yeah.
get it right though. They didn't always know which one was Coke and which one was Pepsi, but they would be able to determine one is different than the other. But they would maybe like confuse it.
Yeah.
Ultimately they're really close, and some people, a lot of people can't tell the difference, but there were some people that were able to.
Yeah. Well, yeah, Coke's an interesting story. Another quick trivia question for you that I did not prepare here, but there's a
Mhm.
drink that is currently sold today, a brand of drink currently sold today that was originally developed because during World War II in Germany, Coke was cut off to Germany, right? So
Okay.
in Germany during World War II, the this drink was developed in place of Coke. and is still sold to this day globally. You've probably had one, maybe even recently, and it's a
Hmm.
regular soft drink.
Regular soft drink. Um, huh. I don't know. Um, shoot. Maybe Dr. Pepper. I don't know.
Not Dr. Pepper, Fanta.
Fanta, no way.
Yep, Fanta. I mean, it's been modified, obviously,
Yeah.
since all the recipes for all these soft drinks have been modified
Yeah, I mean, it doesn't have cocaine
severely since
anymore,
then.
sadly.
Yeah, Coke doesn't have cocaine in
So I think
it.
they could get their sales
But
a little higher.
yeah, with a little, yeah. Well, that's another interesting thing. If you look at the Coke formula, the original Coke formula, well, it had cocaine in it, but it also had about 5 times the amount of sugar that it currently has in it,
Wow, that's quite a
which is saying
concoction.
something. Yeah.
Wow.
But originally Fanta, yeah, Fanta, what is now Fanta, came from in Germany when Coke was cut off to Germany. They
Huh.
developed Fanta as a replacement for Coke.
Did they have like a cola flavor as opposed to orange? All I think of with Fanta is the orange or the grape.
Is the orange drink? I'm not sure. Again, I think the original formula for that is long lost and very different than we have today. But that brand came, that's what the where the brand originated from.
That's funny. I know. I was trying to think of an independent brand because I'm thinking, Pepsi and Coke, but I know Dr. Pepper's separate. But wow, that's really
Yeah.
surprising. I would not have ever associated Fanta with Germany.
Yeah. I would not have either until I learned that recently.
Wow, I came across some crazy Ethan knowledge here.
You delved into something I happen to know a bunch
Ethan is
about.
really passionate about his soft drinks.
Well, Coke, yeah, Coke, that is my drink. I don't drink Pepsi. My dad drinks Pepsi. I drink Coke.
Yeah, it's funny. My dad used to be a diehard Coke guy, and then these days he's been more willing to buy Pepsi because it's cheaper.
Yeah,
It's kind of a shock the first
yeah,
time he did that, but now it's a little bit more normal.
yeah. That's funny. Well,
Can you tell the
I'm a
difference?
Coke guy. I feel like I can tell the difference, but my
We're gonna
favorite
test
would
that when
actually
I'm up in
be.
Ohio. We're gonna record an episode in Ohio. We're gonna test that. I'm taking down a note here.
That
I'm
sounds
taking,
good. We can do that. We
I'm
can do that.
taking,
I it, I think I can tell the difference. Although that being said, I don't drink a lot of soft drinks. I don't like have a Coke every day or anything like that.
yeah.
But my preferred would be cherry Coke. But
Okay.
my favorite thing would actually be a regular Coke, like wit mixed with grenadine syrup. That would be my actual go-to soft
Grenadine.
drink if I
What
were
is
going to have one.
grenadine syrup? I don't actually know what that
Like
is.
that It's like that red cherry flavored syrup. So you can
Oh,
put
okay, okay.
extra. I put extra in so it's more cherry than like what original cherry Coke would be.
Okay, okay. All right. Wow. Wow.
Yep.
I'm impressed. You really know your stuff.
Know my Coke history.
Yeah, interesting company.
Yep, for sure.
Interesting. I thought you might get that one, but I did not expect to get a whole history lesson here. That was awesome.
Yep, Coca-Cola. I love Coca-Cola.
Do you
Good
know where the
investment
polar
too, in
bear
my
came
opinion.
from? Was that just like something they threw in there to be extra Christmassy? I'm just thinking about that
Yeah,
now.
I don't remember exactly when that came about. It came about later than the Santa Claus branding. That was
Okay.
like another Christmas push later. I want to say like in the 80s or 90s, but I don't remember that exactly.
Coca-Cola bear.
Yeah, Coca-Cola Bear. Yeah, because that's a huge part of their Christmas advertising nowadays is the polar bear.
Yeah, I like the polar bear. That's cool.
Yeah, I do too.
Yeah.
Oh, well, we got some extra trivia and some extra coverage on Coke in there. Maybe everybody go buy Coke shares now.
Yeah. There you go.
It is one of my favorite companies, actually. Just a good,
Yeah.
solid company. It's part of many of our portfolios.
Yeah. I mean, if Warren Buffett loves it, it's hard to fight it.
Yeah, that's right. All right. Well, I think that wraps us up for the week. So Merry Christmas, everybody. Thanks, Nick. Merry Christmas.
Thanks. Merry Christmas.
Yep. I think we'll be back next week. We're working, so we'll record one more episode this year. Probably cover the year-to-date performance since we'll be wrapping up the year, and then we'll close out and head into 2026.
Sounds good.
All right. Thanks, Nick. Bye, everybody.